Here's a question that I'd like you to ask your financial advisor this week. When was the last time that you reviewed in detail our family's tax return? And if the answer is never, or I don't know, or we don't do that here, then I suggest you watch this video a little bit closer. Because what that tells me is the person you're trusting for advice on your retirement or your family's financial future is not looking at the single most important document for your financial picture. I'm Brennan Decima, owner of Decima Wealth Consulting and certified financial planner. I spent nearly 2 decades with one of the world's largest asset managers before starting my own firm. And I'm going to share something with you that most advisors steer clear of. So let's get into it. The vast majority of financial advisors never open up a tax return. Not annually, but never. And I know that sounds absolutely crazy. It's crazy to me, but I'm not exaggerating. I personally know advisors that manage hundreds of millions of dollars. Some of them manage billions of dollars. They've never reviewed a 1040. Now, that doesn't mean that they're bad advisors. Most advisors genuinely care about the families they serve and want to put them in a better financial position. But the industry is not set up that way, and I think you deserve to understand why. The short answer is broker-dealers do not want to touch taxes with a 10-foot pole. And because of that, they're not training their advisors on how to review tax returns. They're training their advisors on investments. That's where these companies make their money. Investment performance. So the advisors are trained to discuss how to build a portfolio and risk tolerance, asset allocation, and the importance of rebalancing. All of those very important with financial planning. However, a lot of planning relies on the tax code. And if we're not reviewing the tax return, there's some very costly mistakes that can be made. Or it means that your advisor is giving suggestions that impact your tax bracket or your IRMAA or your deductions using guesswork. And guesswork can get very, very expensive. All right, I will be the first to admit that earlier in my career, I was one of these advisors relying on guesswork. So I'm going to share a story with you. I had a client that came in that wanted to discuss a Roth conversion. Roth conversions, pretty standard stuff, textbook conversation. We used some assumptions. We didn't review the tax return. Guesswork was involved. And I made a suggestion that I felt was in the client's best interest. Client went home. They executed the conversion. They shared with me that they felt pretty good about the outcome. I felt pretty good about it as well. Fast forward to a year later, client called me not nearly as happy about that Roth conversion decision. That guesswork had become incredibly costly because the conversion had just dramatically moved them up the thresholds for Medicare. Instead of being in the lowest Medicare IRMAA threshold, they now were paying almost $10,000 more for the exact same health insurance coverage. So conversion, guesswork, very costly. What really bothers me most about this situation was it wasn't because of carelessness that it happened. I genuinely cared about putting the client in a better financial situation. This happened and was incredibly costly because I made the decision based off guesswork, not reviewing the tax return. And it caused me to sit back and think how many other clients are getting advice based off guesswork. And at that moment, it clicked. All of them. And from that point on, I made a commitment that every plan starts with a detailed review of the tax return. It doesn't end with it, it starts. And that really was the beginning of Decima Wealth Consulting. Let me share with you exactly what your advisor's missing if they don't review your tax return. Taxes touch absolutely everything. If you're retired and asking your advisor, how much can you withdraw from a portfolio? That's important, but your tax return is going to tell us exactly how much should come from each account. That's going to lead into how your investment should be managed to build around that cash flow strategy. It's going to help us understand what wiggle room you have for Roth conversions. Let's say you're in the 12% tax bracket and there's a little bit of a gap between you hopping into the next bracket. That's a conversion opportunity. But if we're not looking at that, that window is closing each year. Your tax bracket's going to let us know where you are for IRMAA threshold, so you're not paying substantially more for your Medicare cost. It's going to help us understand where you are for capital gains and qualified dividends, which helps us better manage your non-retirement accounts. This is going to impact your Social Security claiming strategy. So again, everything is impacted by taxes, but if your advisor's not reviewing the 1040, all of those opportunities are potentially being left on the table, or worse, you're getting a suggestion that's costing you more because of guesswork. All right, let's look at it this way. Let's say you walked into your doctor's with chest pain, and all of a sudden the doctor says, hey, let's do this procedure. I'm going to put you on this medication. Well, if that was me, I'd say, hey, doctor, before we do anything, should we do some tests or maybe run some blood work? If my doctor said, hey, we don't do that here, that's a red flag. I'm not going to let that doctor anywhere near me. I'm not going to go back there, right? That's medical malpractice. Yet for some reason, millions of people's retirement plans are getting their equivalent of advice without the proper blood work. Their advisors aren't reviewing the numbers that matter. They're not asking the questions that matter. And for most clients, they're completely unaware because the industry has made this normal practice. That's not fair to you. All right, so what do you do with all this? Just ask, right? The easiest thing to do is ask your advisor how often they're reviewing your tax return. How often do they coordinate with your CPA? What strategies are they putting in place for the future to minimize future taxation? What levers have they pulled based off that tax return review to save you money? And the answers that they give you, they're going to tell you everything you need to know, right? And if they tell you that they're not doing it, it doesn't mean they don't care about you. It doesn't mean that they're a bad advisor. It just means they're operating under the parameters of the company they work for or what they've been taught. But you know what a good financial plan is now, so you can ask for one. The reality is taxes touch absolutely everything in retirement. They impact Social Security, Medicare, the amount you get to take home to enjoy your quality of life, and the amount that gets left behind for your loved ones. If your financial advisor is giving you advice and recommendations, but not reviewing the one document that ties it all together, chances are there might be a gap in your financial picture. Chances are they're relying on guesswork. You deserve more than guesswork. Your family deserves more than guesswork. And that's why I created Decima Wealth Consulting, because the families I serve deserve more than guesswork. Please subscribe if you found this video helpful. I'm looking forward to seeing you in the next one.